Hi friends, today we are going to discuss about accounting basics. So what is this accounting? So let's look at it. Accounting, right? So why we need this accounting and who need this accounting and how we should do this and what is involved in this accounting. So let's look at all these things. For example, you are working for a company. I don't think you are much worried about accounting. You don't have to worry much about accounting. But let's say you started a business. Then, yes, definitely you are worried about accounting. But why? So, why you are worried about accounting? So, what you do in business? So, what you want to know at end of the day in the business or end of the quarter or end of the financial year? So, why you start business? To get some profits? So, every day you need to know, depends on your type of business. Maybe you will calculate daily basis or maybe monthly or quarterly or yearly basis. So, how do you actually calculate whether your business is running in profits or losses, right? So, how do you know? So, you will know only when you record all the transactions that are happening in the business. So, you need to record. So, you need to record all the transactions, right? So, why you need to record all the transactions? Only then you will know whether you are in profit or loss, right? So, based on this, you will take further decisions whether you need to continue this business or you need to switch to some other business or shut down this business, right? This is one requirement. Let's say your business is very big. Maybe you have investors and shareholders, right? Shareholders, investors. Then what happens? You need to share your financial status of your business with shareholders, investors as well, so that you will get more investments into your business for the growth. So, finally, what is accounts? Accounts is we need to systematically record. One is recording, and then what we need to do? Analyze also. So, analyze for what? Whether we are in profit or in loss. So, record and analyze. And then what you will do after analyzing? You will report. So, you will report to whom? You will report to respective stakeholders or investors, whoever has invested in your company, or for yourself purpose, whether you want to know whether it is running in profit or loss. So, this is what accounting all about. So, let us deep dive into this accounting and let us understand some of the terminologies that we use in accounting, and what kind of financial reports that we generate. Let us look into all these things. So for example, you started a business. You started a business. Now, to start this business, let's say you need 50 lakhs. Okay. So now what happens is you have only 20 lakhs with you. You are the owner. So now you are investing 20 lakhs into business. So this 20 lakhs we can call it as capital that you invested in the business. So let us write here. So this is capital, right? So next, what you did, you don't have required amount of 50 lakh to start this business. So what you did, you went to bank and then you took loan of 30 lakh, right? If you have taken 30 lakhs loan, that means you need to pay this amount back to bank later on with interest. So that means you have to pay this loan back to bank, which is called as liability, right? So this is called as liability. So either you take from bank or sometimes you take from some investor or from friends, right? So all these things we can call it as liability, and whatever you have invested is called capital, right? Hope these two things are very clear. So now in this liabilities you have again two types. One is long term and second is short term. So what is long term liability and what is short term liability? Let's say for example you have taken 30 lakhs loan, and if you need to repay this amount in less than 1 year, so how much when you should pay? You should pay within 1 year, right? So if you need to pay within 1 year, then we can call this as short term liability, right? For example, this loan or whatever the amount you have taken from investors, if you are going to pay that within greater than 1 year, then we can call that as long term liability. So simple, less than 1 year short, greater than 1 year long. Hope this is very clear. So now we have learned about capital and liability. Within liability, what is long term liability, and then what is short term liability. So let us look at one more, that is drawing. For example, you are the owner of the business, but you are drawing some amount from the business. So you get some profit when you are running the business, and then you wanted to take out some money for your personal use, then we can call that as drawing, right? Either you take money or you may take some goods or services. So either of these things, if you are taking for your personal use, right? Personal use, then we can call this as drawings, right? Till this, are you clear? If you need any clarifications, you can mention in the comment section so that I can clarify. So next, let us look at one more thing, that is recording of these transactions, related to recording of these transactions. So all these transactions we record in double entry, right? So what is called double entry? Let's take an example of previous thing. So if you look at this, here you have taken 30 lakhs of loan. So this is one transaction. So but how do you record this 30 lakhs loan? Is one transaction is 30 lakhs you have got cash, right? So this became an asset for you. So 30 lakhs cash inflow, this is one entry. And what is the second entry for this? Second entry is you need to pay this loan back to bank. How much you need to pay? 30 lakh. So this is another entry which is liability, and this is asset. So this is what we call it as double entry. So for any transaction, this is one of the example I have given, but any transaction that happens in your business, we have to make two entries, that is called double entry, right? So now next thing, let us look at what is asset. By this time you must have understood what is asset. So asset is definitely having some monetary value, and which can sometimes generate revenue in future. So let's say here this is an asset having monetary value of 30 lakhs, which is called an asset. Sometimes let's say you bought a land, this is also an asset, or you bought a building for your office purpose, this is also an asset, or you bought a machinery for your office manufacturing purpose, this is also an asset. So all these things are assets. So again, in this asset we have two types. One is long term asset and second is short term asset. So like we have learned in liability, long term and short term, where we have related to number of years. Less than 1 year is short term, greater than 1 year is long term. So similarly, when you come to asset, same thing. So if your asset is going to generate revenue or cash within 1 year, less than 1 year, then we can call this as short term asset. So what is the example for short term assets? Let's say you bought some raw material. So what you do with this raw material, you make some products, right? Some goods, and then you can sell and then get profit or loss, whatever. So this if you are able to do less than 1 year, then we can call this as short term asset. Let's say you bought some land or some machinery which will give revenue after 1 year, let's say greater than 1 year, then we can call this as long term asset. Hope this is very clear. So now we have learned capital, liability, long term and short term, and drawings. And then we learned about how to do entries, dual entries, double entry, and then asset, long term asset, short term asset. Hope you are clear till this. So next, let us look at debitors. So what is debitors? So it is a general word, so most of us already know. Let's say for example, you sold some goods and services. So you have a business now, and let's say you are manufacturing some tables and selling to customers. But you sold these tables to customer on credit, right? Not with the cash. So he may pay it later on. Then we can call them as debitors, right? Because you have not received the money for the tables that you have sold to this particular customer. So this customer we can call as debitor. So similarly, let's see what is creditor. Creditors. So here customer has purchased from you on credit, that is called debitor. Now the business is going to purchase some goods on credit. That means you will pay this amount later point in time, right? So then we can call that as creditors, right? Okay, so next, self-explanatory, expenses. So what is expenses? Expenditure that you make to produce and selling goods and services. So if you are making some products, let's say you are making these tables, for that you need to have some expenditure. So what purpose expenditure? Maybe you will buy raw material, correct? Or you pay salaries. All these are expenses. Okay. So next, let us look at most important and useful, that is income. So what is income? You are selling these tables in your business, so you will get some money. So that is nothing but income, right? And then let us look at what is revenue. So revenue is nothing but the business earns by selling the goods, that is tables here, or providing services to customers. So almost both are same, right? Then what is goods? Goods is nothing but the products that your company is dealing with, right? Next, this is also most important for your business. So what is this? Discount, which is known to every one of us, right? So here you have two types, trade discount and cash discount. So what is trade discount? Let's say you are giving discount on sale price for bulk purchase, right? So if you are giving discount on bulk purchase, that is called trade discount. Sometimes you give cash discount for early payment, right? So then that is called cash discount, right? So till this it is clear. So now let us look at some important aspects of accounting. So we will discuss very briefly, but if you need in detail, you can watch my detailed videos. So let us look at what is balance sheet. Very, very important for looking at the financial position of any company. Financial position of any company, you need to refer balance sheet. So what it contains? So it contains three things. One is assets equal to equity plus liabilities, right? So this is how we represent balance sheet. So you know what is asset, you know what is equity or capital, you know what is liabilities. So if you take the same example what we discussed here, so we have taken 50, we have invested total 50 lakhs and 20 lakhs is owner equity or capital, and then 30 lakh is loan, right? So how do you represent that in balance sheet? So here asset is okay. Now which one you are clear? You are clear about liability because you have taken loan from bank 30 lakh, and equity or capital, how much owner has invested? You are clear about it, 20 lakhs. And what is the asset? Total investment in the business, that is 50 lakh. So always you have both sides equal. So this is why we are calling it as balance sheet. So once you make these kind of entries, whatever the number of entries that you do, finally when you sum up all assets and sum up equity and liabilities, should be both should be equal. Only then it is called as balance sheet, right? So you are clear about balance sheet. So this is also, you can see double entry which we have talked about is showing here. This is one type of entry, this is another type of entry, right? So this is how we show in balance sheet. So if you want to have details on this, you can refer to other videos where you can see details about balance sheet. So next important thing is, let us look at income statement. This is also very important. So how do you see this income statement? Another name is P&L account, profit and loss account. So it is very simple. Because I am explaining you in brief, I am not getting into details, you can easily understand this. So income, how you will get income? Either profit or loss. How you will get? Revenue minus cost. So what is revenue here? The amount that you got through sales, right? That is, let's say you have sold 100 tables, and let's say each table costs around 1000 rupees, which is 1 lakh, right? So you got 1 lakh revenue using the sales. And then what is cost? So to manufacture these tables, right, you need some raw material, you need labor, you need machinery, so some expenditure is there, and you need to pay salaries, etc. So all that comes under cost. Let's say to manufacture each table the cost is around 600, right? So now what is the income? One table, what is the income? Your revenue is 1000 rupees minus cost is 600. So your profit is 400 rupees. So since it is in positive, it is called profit. Let's say your cost is more than revenue, then you will get into loss, right? So this is called income statement, right? So these are the important aspects of accounting. Hope you understand all these terminologies. Thanks for watching. Like, share and subscribe, and comment in comment section if you have any doubts and if you are looking for any specific videos, and press bell icon if you want to watch my latest videos. Thanks for watching. See you next time. Hi friends. Today we are going to discuss about income statement. So in financial accounting, income statement is one of the key financial statement. So what are the three different financial statements which are critical in accounting? So one is balance sheet and income statement, and then cash flow statement. So this video we are going to discuss in detail about income statement. So let us also look at high level what is balance sheet and cash flow statement as well, but then we will look into in detail about income statement. So if you want to have a look at balance sheet and cash flow statements, you can look at my other videos which will explain you in detail. So friends, if you have not subscribed to my channel, subscribe to my channel and like the video, share the video, whoever you think it is useful, beneficial, and also press bell icon if you want to watch my latest videos. So let us get into three important financial statements. What are those financial statements? One is balance sheet, second income statement, and third cash flow statement. So all these three financial statements are very critical, and these statements will give you what is the business health of your organization, right? So what it gives, it gives health of the business. So by looking at these three statements of any company, you can easily tell what is the health of the business, right? So now if you look at balance sheet in brief, so what you will have here is assets equal to liabilities plus equity, right? So in assets again you will have two different types, fixed assets and current assets. So fixed assets where you get revenue generated in long term which is greater than 1 year, and current assets which will generate revenue less than 1 year. So fixed assets like land, properties, machinery, and current assets like some inventory, right? You where you can convert them into finished goods and sale, and you can get the revenue. So this is briefly about assets. And then liabilities, when you take any loan or from a bank or from any other friends or relatives, so that you need to pay them back, so it becomes a liability. And equity is something which either you invest, self investment, or from your friends or relatives. So this is equity, right? So always assets will be equal to liabilities plus equity. See, whatever the revenue that you generate which comes out of income statement goes into this equity, retained earnings, right? So that is a link between balance sheet and income statement. So now let us look at what is income statement in brief, and then we will look at in detail later on. Income, right? So it's very simple. You take revenue and remove expenses, which is either profit or loss. This is called income statement. These retained earnings will go to balance sheet into cash asset as well as equity, right? So then the third one is cash flow statement. So what is cash flow statement? It is very simple. It will show overall statement of cash, how it is flowing. Whatever cash in is added into this statement, and whatever the cash out from business is also added into cash flow statements. So this is what you will get, net cash flow, right? So this is overall about three different type of statements that we generally use. So now let us get into the details of actual topic, income statement. Right, so what is income statement? Income statement, it is a summary of business revenues, like we have seen before, summary of business revenue and expenses over a period of time. This is over a period of time, maybe mostly yearly or sometimes quarterly. You can even do it daily or monthly, but generally they do it yearly, right? So this is what is income statement, and it is also called, what is the different name we can give it for this? P&L, right? Let me select any other color. Profit and loss, or P&L account, right? This is also called P&L statement. or you can also call this as statement of earnings, or you can also call statement of operations, right? So we can call this as either income statement or profit and loss, P&L, or statement of earnings or statement of operations, right? So this is what income statement all about. So let us look into some examples and also discuss about what is this revenue and expenses. So what is, how you calculate profit and loss? So let's look at the formula first. Revenue minus expenses, right? This is either profit or loss, correct? For example, if the revenue is more than expenses, let's say your revenue is 100 rupees, expenses are 60 rupees. So this is profit, right? For example, if your revenue is 100 but expenses are 120 rupees, then it is loss, correct? In simple terms, this is how you calculate income, right? This is clear, I think, right? This is very simple. So now let's look at what are the type of revenues and what are the type of expenses. Let us go further detail into it and then understand what are the various aspects about revenue and expenses. So first let us look at revenue. So revenue, how you get money? Either you get from sales, product sales. So let's say you are having a sales of you are manufacturing tables and then you are selling tables. So by selling these tables, you will generate some amount, XXX amount, right? This is what revenue. Or you can also get revenue by services. So if you are rendering some services, right, you will generate some money. So either through products or services, you generate this revenue, correct? Is it clear? Okay. So now if you have any doubts, you can mention in the comment section so that I can clarify. Now let us look at expenses. So expenses are also like you will have two types. One is direct, another is indirect. Direct, indirect. So what is direct cost and what is indirect cost? So again, in this indirect cost, you will have fixed or variable. So what is direct cost? So direct cost, let's say you are manufacturing table, right? So you need some raw material for this, right? So what I'm trying to say is to manufacture this table, whatever the direct cost that you are incurring, right, can be taken as direct cost. Or for example, either you have a manufacturing unit, you are supposed to manufacture tables. If you manufacture tables, then you will have a direct cost. But if your staff is sitting idle, maybe because there is no demand, and then you are not doing manufacturing right now, but still you will have some indirect expenses. What are those indirect expenses you will have? Irrespective of whether you manufacture tables or not, you will have, because you need to pay rent, you need to pay salaries, right? You need to pay maybe insurance sometimes, You need to pay admin expenses. You need to pay legal sometimes if it is a big firm, right? You need to pay accounting, marketing, right? And sometimes you will have depreciation, right? So all these are overheads. Even if you don't do manufacturing of tables, you will still need to incur all these expenditure. So this is what we call about indirect expenses. Okay, so now let us look at this direct expenses, also called as cost of goods sold. Cost of goods sold. So let us take some example and see how we can make one income statement. Okay, so now income for XYZ Limited, and let's say for the period of quarter ending 31st March, right? So let's take an example of you have, let's take the same example like manufacturing unit having for tables, right? Okay, so now let's say you have generated a revenue of by selling the tables, right? You have sold the tables and you have generated a revenue of how much? Let's say 100 million. Okay, INR. Let's consider all these numbers are in million. Okay, so now, and what is the cost for manufacturing all the tables? Let's say you have got 100 million by selling 10 million tables. So for manufacturing these tables, you have incurred some direct cost, correct? For raw material or whatever. So what is that cost? So that cost is cost of goods sold for this 10 million tables. So what is the cost of goods sold? Let's say for example it is about 40 million INR. So now what is the profit? This profit is gross profit. So we call this as gross profit, that is 60 million. So till this it is clear, right? So this is very simple because we have just taken what is the total revenue that you have earned by selling 10 million tables, and then what is the cost incurred to manufacture this 10 million direct cost, right? That is 40 million, and then 100 minus 40 is the gross profit. So this we can take it as a gross profit for the particular quarter based on this income statement. So now once you get gross profit, you still have some other expenses, right? So where you will account for all those expenses, they are all indirect expenses. So let's say now you have gross profit of 60 million. So what we should do now? So gross profit is 60 million. So from this you need to reduce all indirect expenses. Indirect expenses, right? So indirect expenses can be anything like salaries or rent or right marketing expenses, etc., etc., right? So what we should do here, this indirect expenses we need reduce from gross profit. So let's say this total indirect expenses are around 20 million. So now once you reduce this expenses, you are getting 40 million. So this is, we call it as operating profit. We can also call this as EBITDA. EBITDA, right? So what is EBITDA? Full form, right? So we can also say EBITDA means earning before, you can have this earning before interest, I is interest, T is tax. So you need to pay interest, you need to pay tax, you need to pay, you need to reduce depreciation, amortization, right? So all these things we need to reduce, but we have not yet reduced. So that is the reason this is the profit, we call it as EBITDA. EBITDA, right? So what is EBITDA? Earning before interest, tax, depreciation, amortization, right? So this is what we call as operating profit. So now once you get this EBITDA value, what we should do is we should further reduce depreciation and amortization. Let's say depreciation of depreciation or amortization. So for example, why we have to reduce depreciation? Because for example, if you have a machinery worth of 10 lakhs, right? So if you think the lifetime of this machinery is 10 years, right? So per year 1 lakh is the value that will depreciate. 1 year 1 lakh. So for example, you have 10 lakhs worth of material here, yeah, or machinery here, or land or buildings here. So once you decide the period, then you can calculate the per year depreciation amount, and then you should reduce it. For example, you take that depreciation as 1 million. Okay, so now if you reduce, after reducing this depreciation, it will come as 39 million. So this we call it as EBIT, because now we have reduced depreciation and amortization. Here we didn't consider amortization, but if you have to consider amortization as well. So once you remove these two, this is left out is EBIT, right? So what is EBIT? Earning before interest and tax. So once this is done, what you have to do to get the final profit, you need to reduce minus interest and minus tax, right? So let's say your interest is around 2 million, and tax maybe at 30% or 20%, but just let's take an example of another 3 million. So now overall you need to reduce 5 million, right? So if you reduce 5 million, finally what you will have left out with 39 is 9 minus 5 is 34 million. So this 34 million is what you call net profit, right? This is net profit. So this we call it as net profit. So we got net profit of how much? 34 million. So this is how we prepare in income statement, correct? So Friends, this is all about income statement, and if you have any doubts, you can mention in the comment section so that I can clarify. And please, if you have not subscribed to this channel, go ahead and subscribe to this channel, and also like the video and then share this video if you think it is useful for any of your friends, and then also press bell icon if you want to watch my latest videos. So thanks for watching, and enjoy your income statement preparation. And if you have any doubts, you can leave comments in the comment section. See you next time. Hi friends, today we are going to discuss about balance sheet in accounting, which is very important for any company, because balance sheet shows where we are standing with respect to assets and equity and liabilities. So let us look at what is this balance sheet. So if you look at the formula, always assets on the left side and equity plus liabilities on the right side. So let us look at what is this assets and equity and liabilities. So always the value of assets equals to value of equity plus value of liabilities. So what is assets? So assets are generally controlled by an individual or a firm, and that helps generating future cash flows, right? That is called asset. We will look into an example as well. And what is equity? Equity is generally the ownership either by self or through investor, so who invests money into the firm, right? And then what is liabilities? Liabilities, let's say you have taken some loan from either by bank or from your friends or from investors, where you need to pay the money back to them, which is called liability. Right, so let us take an example. For example, if you want to start a restaurant, right, and then you need an investment of let's say 1 crore rupees, but you have only 20 lakhs with you, and then you have taken remaining 80 lakhs through bank loan, right? So now if you look at assets, what is the asset here? Asset is this 1 crore, you have the asset, and then equity is you have invested self, this is self investment, that is self equity, which is 20 lakhs, and then you have taken bank loan of 80 lakhs, and you need to pay this amount back to bank, so it is called liability. So how you will show this? 100 lakhs equals to 20 lakhs plus 80 lakhs. So this is how you will show balance sheet for this particular transaction, right? So now if you want to know what is the equity, so what is the formula for equity now? You bring this asset to the right side. So asset minus liabilities, right? So now you have equity of 20 lakhs, which we have discussed, and you have asset of 100 lakhs, and you have taken a loan of 80 lakhs. So it is matching now. 100 minus 80 equal to 20. So let's say after 1 year you have got 10 lakhs profit. So what happens now? 10 lakhs will get, and you have, let's say you have paid this 10 lakhs to clear the loan. So now what happens? This becomes 70 lakhs. Asset is same 100 lakhs. And here, since you have reduced the liability, your equity has increased to 30 lakhs. Let's say after second year, if you look at the balance sheet and from the income statement, if you have got a profit of 30 lakhs, for example. So now what happens? 100 lakhs is the asset minus you have, for example, paid the 30 lakh loan, then now you have balance of how much? 40 lakh, right? So now what happens here, you have equity of 30 plus 30, 60 lakh. So this is how we generate balance sheet every year. So now let us look into little deeper about this further into classification of assets, equity, liabilities. So if you look into this further, assets are now classified into two types: current assets, non-current assets. So what is current assets? Current assets is nothing but if you are able to generate cash in less than 1 year. That means, for example, you have a raw material or some kind of inventory, right? So this you can convert into products and then generate revenue less than 1 year. So we are calling it as current assets. Now what is non-current assets? If you are able to generate revenue after 1 year, greater than 1 year. Let's say you have land, or let's say you have some machinery. So where you can generate revenue after 1 year, then you can call this as non-current assets. So now let us look at what is equity. So equity you have again two types. One is equity share capital and reserves and surplus. This is one category, and second is preferred equity. So what is equity share capital? So these two generally called as common equity, and this is preferred equity. So what is equity share capital? So this is something which given by the self. So you have invested some money and then that is equity share capital. And what is reserves and surplus? At the end of the year, through income statement, you are getting some profit after paying tax. That is comes under reserves and surplus. Sometimes this is also called retained earnings in US. And what is preferred equity? So let's say you have taken some equity funds from friends or family or some strategic partners. So why we are calling them preferred equity? Because once you get profits, first you are going to pay these people. So that is why you are calling preferred equity. And common equity, these are the people self you are going to get later, whatever the profits that you are earning. So this is about equity, right? So now let us look at what is non current liabilities and current liabilities. So what is current liabilities? Like assets, current liabilities also, if you need to pay, if you need to pay within less than 1 year, right, then you can call it as current liability. If you can pay after 1 year, greater than 1 year, let's say you have time to pay more than 1 year time. So then you can call this as non-current liabilities, right? So friends, this is detailed formula for balance sheet where you can see two type of assets and then three type of equities and then two type of liabilities. So this is in brief about balance sheet. Hope you understood. Thanks for watching. Like, share, comment, subscribe my channel, and thanks for watching. See you next time.